Over 1.3 million Canadians are walking straight into a financial trap this year. If you bought or refinanced a home in 2021, your 5-year fixed mortgage is about to renew into a completely different economy. The Bank of Canada's own data shows that these renewals are likely going to trigger increases in payments, and some even going all the way up to a 20% jump. The banks are counting on you being too overwhelmed to fight back. So today, I'm giving you an exact 3-step playbook to protect your wallets and beat the 2026 renewal shock. We're going to break down exactly what this rate jump means for your monthly budget, expose the auto renewal trick that the lenders are going to try and pull on you, and most importantly, give you a strategy to safely navigate this wave. So let's get to work. Let's look at the actual numbers. Back in 2020 and 2021, Canadians were locking in 5-year fixed rate mortgages at historically low interest rates. We're talking about rates of 1.9% and sometimes even lower. But that 5-year term is up. And right now, depending on the bond market and the lender you're with, you could be seeing rates in the high 3s to mid 4s, sometimes even closer to 5%. So what does this actually mean for your wallet? If you have a $500,000 mortgage, you've likely been paying around $2,100 a month for principal and interest. At today's rates, that exact same mortgage could jump to nearly $2,900. That's an $800 a month increase for the exact same house. No renovations, no kitchen, just pure interest going straight to the bank. And here's where the trap is set. About 30, sometimes maybe 60 days before your mortgage matures, a very official letter is going to show up in the mail. It's your renewal offer. It will have a rate on it and a very convenient little box that says, "Sign here to accept." Do not sign that paper. Banks know human beings hate friction. They know you are busy. They know you're stressed and dreading the idea of requalifying or trying to negotiate a new mortgage. So they offer you the path of least resistance. But that convenient offer is almost never their best interest rate. It's an inflated rate designed to test your complacency. If you sign it, you're literally volunteering to pay a loyalty tax for the next 3 to 5 years. And if I'm being honest, I've seen renewal letters with posted rates on it for the renewal rates. And just so you know, those are over 6%. So how do you beat it? Well, you follow a 3-step survival playbook. Step 1, the 120-day trigger. You do not wait for that letter. Exactly 4 months before your maturity date, lenders will generally let you lock in a rate hold. If rates go up before your renewal, you're protected. If they drop, you get the lower interest rate. It's essentially like having free insurance. And with the bond market and the things that are happening right now, getting those rate holds is a very good idea. It can likely save you thousands of dollars on your interest rate. Step 2 is the equity check. If home values in your specific neighborhood have dipped since 2021, switching lenders could trigger an appraisal that catches you off guard. You need to know your real home value before you apply anywhere else. And that's where a broker can step in and help you navigate that process. And one thing a lot of people don't know is at renewal, you can move your mortgage from your existing lender to another lender at virtually no cost as long as you keep the details of your mortgage the same. It's called a switch transfer. And it's a great way to make sure that you're getting the best rates and best options with your renewal. Step 3, weaponize your loyalty. You need to take your file to a broker. Let them shop the entire market to find the lowest possible rates. Then, if you want to stay with your current bank, you have some ammunition against them. And at our office, what we focus on with these mortgage renewals is getting your renewal offer, shopping the market. If your existing lender is the best option, we're going to tell you to stay put. But if there's something better out there and we can find it, we can show you how to move from your existing lender over to them, virtually cost-free as mentioned before. The 2026 renewal wave is going to hurt, but it doesn't have to ruin you. If you have a renewal coming up and you want my team to run the numbers for you, specifically on your situation, your house, and your details, click the link in the description down below to book a free strategy call with me or my team. And to understand why fixed rates are moving right now before your renewal, you need to watch this video right over here, where I break down the silent rate hikes the banks are hiding from you. And if you got value out of this video and like the content, make sure to subscribe and hit that like button so more people like you can see this video. We'll see you on the next one.